Now, the world faces yet another shock. The war in Middle East is upending lives and livelihoods in the region and beyond. It is also dimming the outlook for many economies that had only just shown signs of sustained recovery from previous crises. The shock is global, yet asymmetric. Energy importers are more exposed than exporters. Poorer countries more than richer ones, and those with major buffers more than those with ample reserves. Beyond its painful human toll, the war has caused serious disruption to economies of most directly affected countries, including damage to their infrastructure and industries that could become long-lasting. Although these countries are resilient, their short-term growth prospects will be negatively affected. Large energy importers in Asia and Europe are bearing the brunt of higher fuel costs, even here in Nigeria. About 50% in some cases, the price of global oil, 20% liquefied natural gas, which are, of course, passed through the Strait of Hormuz, feeding demands not only in Asia, but also in parts of Europe. Economies heavily dependent on oil imports in Africa and Asia are finding it increasingly hard to access the supplies they need, even at inflated prices. My next guest is Dr. Paul Alaje. He is a partner with SPM Professionals. Dr. Alaje, good afternoon, and thank you so very much for joining us on the show.
A beautiful afternoon to you. It's been a while. Thank you so very much for having me.
Yes, indeed. It's been a while. And I'd like to ask you first, if Nigeria were to be a totally fully importing country that's importing petroleum products, refined petroleum products, considering what is going on in the Middle East today, where would we be with regards to pricing and availability?
Well, I can assure you that in terms of pricing, government would have found it difficult to want to remove subsidy at this time because of pressure. The pressure that we experienced sometimes in 2023 is what we might just be trying to restore now. So the pressure will be there. In terms of availability, I believe there will be queue. There will be queues. So if you were to be importing, there will be queues in most gas stations. So for now, we are not seeing queues. Thankfully, because we are now a local refining country, we have functional local refinery that is able to a large extent, provide most of our demands in Nigeria. So if that were not to be there, the implication will be that we have to import. But that will not, it will not end where your question ends. It will end by next year, where you see that exchange rate will further be devalued because of pressure that we'll have to mount on the naira. And the pressure will be so sudden, this will be due to whatever naira rate may be. If we choose to say import but devalue, which will be worse off. If we are devalued and we are still importing, it will be worse off, especially one of the things that account for 10% of our FX demands, which is the purchase of PMS, diesel, and so on and so forth, account for all the about 10% or more of naira demand. So of dollar demands, I beg your pardon. So I tell you that it would have been worse off if we had no refinery at all. And the price, of course, it depends on what government wants to do. If it's a subsidy regime, it certainly will be higher than what people are paying. If it's a non-subsidy regime that we are importing, definitely we'll be paying more.
That's a good way to start our conversation. But we've seen elevated inflation, and of course, we expect inflation on Friday this week. And everyone is saying, oh, we could get to 16%. We could slightly get above 16%, considering the full impact of the war. Now, would you compare it to what we had in the month of March? Mr. Alaje, what are you expecting regards to inflation? And what does it mean for us, just as we are getting out of this phase of the reforms being undertaken by this administration?
Well, I think MBS did a very good job in the last publication when they reviewed to us that inflation elevated year on year from 15.0, I think 106% to about 15.38%. MBS reported accurately what the number should be at about 15.38%. Other watchers that reported it's only within 5% standard deviation. The variance was not much. So to a large extent, I would say that MBS did a good job. MBS also reviewed what perhaps as many might think it would be difficult for them to do, which is to report 4% inflation month on month. For this month of April that we expect MBS to report, we expect month on month inflation to go higher, but it might not be up to 4%. Headline inflation is also expected to go higher. The truth is that both higher in number. I don't expect inflation to go beyond 16% for April, even though people may feel that, oh, we're bearing more than 16% inflation. That's absolutely correct. Recall that we have rejigged a basket of commodity, and we are just cycling in terms of what inflation will be. What we never planned for, which is the Iran-US-Israel war, has also put a new blow in the face of everybody around the world. How long will this last? Well, I don't know if I should answer that, but I can tell you, if you observe very carefully, Ukraine and Russian war is still going on. It's a war against superpower. This other one is also still going on. People say that, oh, but it was Russia that first attacked Ukraine. We may also want to say that it was America that first attacked Iran. So it's a war power. We cannot speak for or against absolutely in this matter. But what we can say is that if we look at the plans, if what the war powers are looking for is not to a reasonable understanding, I can tell you that I'm not sure if the agreement between countries that are involved is not really understandable whether this war will end anytime soon. Yes, we have seen some reduction in potency of the war, but I can also tell you that we pray that this reduction will last, because if the escalation comes back, and I've read reports, and I've also seen on different publications where that the two key countries here have really not agree or aligned fully. But we are hoping that while the crisis might be going on, first of all, the Strait of Hormuz is opened so that global supply chain will be reasonably restored, which means inflation around the world will come down or will be moderate. But it's not just about a Strait of Hormuz being open. There is expectation of future rise in price. As we speak, until we see positive signaling from key leaders around the world, especially of the United States, Iran, and Israel, until we see positive signaling of let me say, a hold on the war, and this will go beyond a 2 weeks or 1 month window, a larger period of time, we start seeing that reduction of future increase in price, which of course will now affect what inflation is saying, and we have positive impact on supply chain. Now, the real thing here is, how do we mitigate against disruption in supply chain? What we need to do immediately is for countries to cooperate for Strait of Hormuz to be reopened. If that is not open, it's a matter of time. In the next 1 year, the world may be going into another major crisis. Recall that we saw that in 2018. Nigeria started its own in 2016, actually, when we experienced a recession. I think it was 2 consecutive recession, 2 quarter-on-quarter recession. After that, 2018, we saw global trade war, especially the one that was evident in US and China. Because Nigeria was still recovering, the impact was not as much. COVID struck in 2020, which had major impact on us and went to another recession. Then Russia attacked Ukraine in 2022. In 2024, it was Israel versus Hamas. In 2026, it was Israel, America versus versus Iran, which is what we are still bearing. So I can tell you that for 2 years, this impact will be with us. Clearly, whether or not another one will come by 2028 is another conversation entirely. But this economy, this Nigerian economy, has been imposed back to back, straight, 10 years, 1 full decade or back to back. I'm working on a publication, and I will, of course, publish this, not just in media houses, but journals around the world, of the impact of this, a full decade impact on a developing economy. And I'll be using, of course, Nigeria as my case study. That's my country of birth. I'll be using that so that we can understand the full length. And it will help us, for those of us who are in the policy space and those that are in the political space, how do we mitigate against future occurrence? And I can tell you that whether or not something will happen in 2028 is just for the world to know, to prepare for the obvious. If it happened in 2018, happened in 2020, happened in 2022, happened in 2024, happened in 2026, how will we stop 2028? It's almost certain that something else will happen. So when we make publication as researchers, what we are doing is we're preparing minds of world leaders, we're preparing minds of policymakers, we're preparing minds of stakeholders, and indeed actors around the world for what will happen within the economic space and what we must do this moment today.
Stuff. Now, staying back home, just like you said, if we'll continue to have this elevated inflation, considering what is happening in the Middle East, what would you expect of the MPC? Many say clearly that we might see a shift from that. Yeah, I see that smile already. You know, we thought we were already getting to that point where they were easing rates. But I don't think with what we have presently, that will be sustained. Tell us what you also make of that and your expectations.
First of all, let me say that I saw a very good outfit of central bank. I don't think I have spared the central bank when I noticed that there are things they should do and they are not doing fast enough or they've not done. But I can tell you, in the last 12 months that we have followed with the policies and the activity of central bank at policy level, not monetary, or monetary policy level, I think central bank is really trying its best to ensure that this economy does not go into another major policy crisis. And I can give you an instance. One of the things I've been advocating, myself and my team, of course, advocating since last year, is that the subnational, we need to be extremely careful when it comes to reckless spending. I was impressed to have seen central bank mention that in a publication. Yes, they are making policy, but the Nigerian Constitution limits them to control what the subnational will spend on what and how. And that's interesting that a key policy making organ of our country, the Central Bank of Nigeria, is saying that to the subnational. I only hope that they have power to enforce. Of course, I'm not sure if that power is there. But so here is it, going to beyond just central bank and expanding that conversation a little bit to monetary policy committee. So I expect committee to hold rates again. The reason is because when you look at what has happened around the world, easing rate is not the way to go, and increasing rate definitely will be too early. What Bureau of Statistics has only reported is one inflation number. By this week, we expect the second inflation number to be reported. Chances are high. Chances are high. We cannot say for 100%, but chances are high that inflation will go up, especially month on month and year-on-year inflation. We expect that to go up. Along the line, we might see some kind of reduction and some kind of increase. It is normal for inflation, not for all the indicators to go in one direction. It might also not be a unipolar or a one directional pattern of inflation. So monetary policy committee, we need to look at all this and see that even though we are going through global tension, but we have also seen some level of say caution on hold in the fuel period. We also hope that America and Iran will extend the period of or the period of no strike that we have seen in the past weeks. We hope that they will extend that. So as monetary policy committee, it will be too hasty to say we want to reduce rates, we want to increase rates. We are in a moment of uncertainty. Uncertainty will mean that monetary policy committee, we need to take the third decision. The first decision, by the way, is to reduce rates. The second decision is to increase rate. The third decision, which is also a key decision, is to hold rates. And if they do that, it does not mean they have wasted time. It only means that they have taken the decision that is required in the circumstance.
Now, I mentioned clearly that Nigeria's Minister of Finance has said that government is not going to go back to subsidies despite all of these challenges. And what we see, as of today, I think a liter of fuel is selling for about 1,330, depending on where you're buying from. So that'll be my final question for you, Mr. Laje. What do you make of that? And clearly, if we are to look at interventions, because we've heard lots of comments online, everyone coming up to say there must be a form of intervention to address the fallout of all of these challenges that we face. So what would you say, are there any quick wins for government really at this time to address the impact of this on the masses? Dr. Alaje, did you get my question?
Please help me repeat the question, sir.
Well, I'm talking about what Mr. Taiwo Yedele said, talking about no going back with regards to subsidy removal. So what do you think should be done to address the negative fallout of a Middle East crisis?
Well, thank you so much. This is a very apt question. I've been asked similar question at conferences, at debate, and so on and so forth. Now, Mr. Yedele had mentioned that. I think he also had mentioned this to some investors that I saw the snippets of the report that subsidy is gone and Nigeria will embrace the market system. And I've also seen a number of leaders around the world, including the one in Singapore. I'm trying to put a short report, perhaps maybe just a tweet if the time will not report has done about $5,000 to household per annum. And Nigeria and Singaporean economy, Nigerian economy and that of Singaporean economy do head-to-head. But I tell you that within the limit of what we have, there's certainly what we can do. If subsidy is not given to individual household, I'm of the opinion popular in some that some other commentators are really helping to escalate this. We can support Nigerians by providing production-driven support, subsidy, whether we like it or not, support will become manufacturer. What I mean, we can go to today if I provide up to over 80% of our consumption. Now, what I advise government to do is that
Dr. Paul Alaje, we are not getting the best of this chart anymore. I think I must thank you so much for your time. Very important question there, but I think that's our time now. I must thank you. Dr. Paul Alaje is a partner with SPM Professionals there, taking us through, of course,